market is hitting all-time highs for the first time since the Iran conflict. Is it sustainable? To answer this question, we need to look at the state of the market pre-Iran conflict. What was fueling the rally? What caused a downturn? Class is in session. January 28th of this year, which was a Fed day, was the last time that the S&P 500 market cap weighted hit 7,000 intraday. We did not close there. The rally was fueled by the AI narrative, which then stalled when Claude Cowork was introduced, and it was taking social media and the market honestly by storm. Finally, on April 15th, we were able to close above 7,000 and make higher highs. That stopped around April 20th. Now I want to look at the S&P 500 equal weight index. This assigns an equal value to every constituent within the S&P 500, and it's a way that we can measure broadening. Utilizing the equal weight index tells us if one student is taking credit for the entire group project, because the market cap weighted is very largely dominated by artificial intelligence. The same day when the market cap was making a higher high, the equal weight was not, which it was narrow. But then on February 6th, the Dow Jones Industrial Average hit 50K. The Claude news fueled a sell-off, so a rotation out of artificial intelligence stocks. And more importantly, the University of Michigan, that gave us our consumer sentiment surveys, told us that short-run inflation came in at 3.5%. So the expectations of inflation for the next year were at the lowest levels since January of 2025. So before the conflict, the market was broadening. AI had a threat of Claude, and inflation expectations were becoming well anchored until they weren't. Now, if you look at April 20th on the equal weight index, it attempted to reach a higher high, but could not and failed. That tells me that we need a catalyst in order to move higher, which is AI or something to do with inflation. Now let's look at oil, gold, the dollar, the S&P 500, the 10-year and the 2-year note, as well as inflation expectations from the day before the Iran conflict all the way to the peak in troughs. And then what happened after. This is going to give us an idea of where we need to recover in order to see sustainability. And what stands out to me is the 2-year note increased more than the 10-year. And that tells me that those short-run inflation expectations were reflected within the treasury market. We want to see this reverse. So let's take a look at the peak and troughs to today. The S&P 500 has recovered, but nothing else has fully. That tells me that equity markets are looking through the conflict, but the other markets are not. This means earnings must follow through. We have 5 of the Mag 7 stocks reporting next week. And on April 29th, we also have a Fed decision. That's your near term. The real dates to me are May 14th and May 15th. President Trump will be flying to Beijing to be meeting with President Xi. I think we may get a resolution. And we'll have a new Fed chair. Just a quick reminder that this is my personal opinion, does not constitute financial advice whatsoever. Finance is personal. I don't know your personal situation. I used to be licensed. I'm not anymore. And that's why I can be on social media. Comment your questions and follow to understand how the stock market really works. Class dismissed.